Now we have a question from one of our citizens here.
Yes, hi. When I first took my mortgage out years and years ago, I think every mortgage was a fixed rate mortgage. And the coming of these adjustable rate mortgages, how much of a problem, what percent of the foreclosures that we have can we directly attribute to the advent of these adjustable rate mortgages? And along with that, you know, we have a lot of realtors trying to sell and push houses. We have the Miami Valley Fair Housing and other agencies trying to get more people into houses. How much have they encouraged or allowed or even pushed people into getting houses through these adjustable rate mortgages?
Before we answer that question, could you just let us know what your name is?
I'm Joe Bradford from Beaver Creek.
Thank you. Which one of you wants that question?
I could talk about that somewhat. I mean, if you look at the recent history of foreclosures and you analyze what kind of loans were underneath the foreclosure, in other words, you'll find that your point is absolutely correct. The vast majority of the foreclosures we've seen in the last several years have been on subprime adjustable rate mortgages. I mean, these are loans, as in Mr. Pittman's case, they have a teaser rate up front, meaning come in the door, it's almost like a drug dealer operates. You know, for a while it's real cheap, and then it's going to get more expensive. But don't worry, we'll get you into another mortgage then, because your property values are always going to go up, and it's real easy to find loans. Well, now property values are actually going down, and it's not so easy to get loans. So people have this sort of payment shock when their rate goes from 6% to 9.75%, even with historically low interest rates. So these subprime adjustable rate mortgages were extremely common 3 to 5 years ago, which is, you know, and within 2, 3, 4 years, those loans have gone bad. Nowadays, we're seeing still a fair share of subprime mortgages going bad. 45% of the foreclosures are still on subprime, but we're seeing more prime borrowers fall into foreclosure now. In part, that's due to the unemployment situation. Ohio's rate, I think, is over 11% now on unemployment. And in part, it's due to the decline of property values, the fact that so many homeowners who had a prime mortgage but are now underwater. In other words, they owe more than their home is worth. And that's a big growing problem in our state as it is in other states. So you're right, but I think the problem's actually gotten more complicated by the fact that we're going through a very difficult recession that's hurting many of our homeowners economically. The other part of your question was, did we go too far of pushing people into homeownership before they were ready? Absolutely. You know, there was people in the Bush administration who were asked, what is the proper homeownership rate for our nation? And they said 100%. I mean, that's just not realistic. Many people prefer or can actually only afford to be a renter. And there's nothing wrong with being a renter. In fact, it may help you. I think many homeowners that pulled the trigger on homeownership wish they had to do it over again.
Thank you. That was Bill Faith, who is Executive Director of the Coalition on Homelessness and Housing in Ohio. Commissioner Foley, go ahead.
I think he started his comment out with the fact that, you know, the loan that he took out in his house was understandable and a bit more simple. And I think one of the things that I've been reading a bit more about is this concept of a plain vanilla mortgage. That if you are a consumer who wants to get a loan and you don't want to expose yourself to a lot of risk, that this concept could apply to somebody who might want to fit into that. If you said, well, I want to expose myself to a little bit more of a different product, then the system should be allowed to let you have those options. But if you, again, don't want to be exposed to that risk, it seems to me that that makes some sense, and I hope that that's one of the things that starts to take root. So,
Thank you, Montgomery County Commissioner Dan Foley. I'm jumping in here to remind everyone that this is Facing the Mortgage Crisis, the Next Steps. This is a program in partnership between the Dayton Daily News, Think TV, and WYSO Public Radio. We are on location at the Cox Ohio Media Center in Dayton, Ohio. I'm Kevin Riley, editor of the Dayton Daily News. Our panel once again consists of Bill Faith, Executive Director of the Coalition on Homelessness and Housing in Ohio, Alfred Patterson, Community Outreach Specialist for County Corp and the local Home Saver Program, and Dan Foley, Montgomery County Commissioner. Our media representatives are Ken McCall of the Dayton Daily News and Emily McCord of WYSO.